I want to share with you the top 4 tips to make sure that you don't spend more than you need to on life insurance. Now, when you're going out to purchase a product, you want to be armed with the tools to really make the best decisions. And it's not often always about the price. I mean, if you really wanted to save money on everything, you would shop only at the dollar store, right? But we don't do that because we want to make sure we're getting the best value and have a quality of something that really represents our value system and has what we want to present and display to the world. For instance, I don't shop for clothes at the dollar store, and you probably don't either. So what we want to do, though, is when we're looking at life insurance, we don't just want to say, I trust you as an advisor or as a salesperson to give me what I actually need. You want to be knowledgeable with this framework to understand what you're actually getting so you can feel confident about the decision you're making. Now, it's not something we just want to trust to the professionals and put you in the back seat. You really want to be in the driver's seat, directing and controlling the conversation and knowing enough to make sure you get what you really want. So now when it comes to cost, we want to make sure that we have this perspective. We want to not only spend as little as possible, we want to get the most for that. So how do we do that when it comes to life insurance? The first tip is to make sure that your life insurance is not only an expense. It's not only a cost. Now, what do I mean by that? Well, if you look at the 2 different purest forms of insurance, you have term life insurance on one side and whole life insurance on the other. A term life insurance policy has a death benefit that pays out to your heirs if you die during the term. That term is usually 10, 20, or 30 years. Now, most people are still living past that term, and thankfully so, we want to make sure that we have a long and healthy life. And the likelihood of you passing away during that term is very small. So all of the premium dollars you put towards that policy then end up getting eaten up and you never get them back. So if you're still alive at the end of the term, you have had a pure cost and you've reaped nothing as a result of that. On the other hand, we have whole life insurance. And this is something that you pay into for a span of time or your whole life. But the point is that the policy goes out to usually age 121, and this is past most people's life expectancy. But what would happen is that is in force your whole life. If in fact you kept that policy and you still were living at age 121, it would endow, meaning you would personally get your death benefit paid to you. So no matter how you look at it, you're going to have that policy pay out if you have a whole life policy, as long as you've kept it in force and you haven't canceled it. Now, what does that mean? Well, we know that death is a guaranteed event. I mean, it's something we're all going to go through at some point. We just don't actually know when. And so we want to plan to make sure that the death benefit's actually going to pay out to us so that the dollars we put in are not purely a cost, but we get some return on our investment. The way that we do that is by looking at a longer term policy, as in whole life. The other thing we want to do, number 2, is we want to make sure that we're getting the most for our dollars. When you look at the cost of term life insurance over the span of your whole life, if you were to, say, get a 30-year policy, maybe renew that for another 20-year policy, and maybe annually renew that afterwards, all the way until the end of your life, ultimately you'd end up spending more dollars to keep term life insurance in force. Now, often it's marketed as this low-cost option because when you're young and healthy, it is a lower barrier to entry in terms of the premium dollars or the cost that you put in. But don't be deceived by that, because if you kept a policy, say, from age 35 to age 65, a 30-year policy, and took that same policy and wanted to renew that at age 65, the cost could easily be 10 to 100 times the cost that you paid per month at the beginning. So you want to look at the long-term perspective. Whole life, while it seems much higher to begin with in the first years, what's actually happening is you're taking the cost of insurance and you're averaging that over the span of your whole life. So as you pay for the premium and you pay into the policy, the beginning years seem most expensive. In the end years, it ends up actually being less of a cost. And in the whole, you're putting in less dollars to keep a policy in force, and you're guaranteeing a payout. Number 3, start young. I know this is challenging because many times as we're young and healthy, our mortality is probably the last thing on our mind. We're really thinking about how do we live this awesome life and how do we create value in the world? How do we have a great time for our family? How do we live these great experiences? But the fact of the matter is we all will die at some point. And usually people who are later in their life are facing that fact of mortality more seriously. And those are the ones who really value having life insurance in place, and they wish that they could get the rates that you could get when you were young. And so we really do ourselves a huge favor if we turn that focus when we're young and healthy and have that great insurability, the great ability to lock in lower rates, and we put that in place even though we might not value it as much as we know we will when our future self is 30 or 40 years out. You will look back and be extremely thankful. You're also locking in that low rate because you're young and healthy. So start young. Number 4, start with a convertible term policy. If you can't afford to put any more dollars towards life insurance than a term policy right now, you'll pay a little bit extra to make sure that that's convertible to whole life. What that allows you to do is say, today I'm young and healthy. I don't know what my future health will look like, but if I develop some type of medical concern or an illness, I want to make sure that I can still get the insurance and I don't have to pay a higher rate as a result of that medical diagnosis. And so when you start young, then you lock in a convertible term policy. You have the ability to convert that over into whole life at the same insurability level, at your great health status that you have when you're young. So those are the 4 top ways to make sure you save money in the long run on life insurance. And again, I want to remind you that sometimes spending more today means you actually end up spending less over the course of your whole life. I really encourage you to check out this podcast and article for more valuable tips on not only life insurance, but also how to save money on disability insurance and health insurance, 2 other pieces of insurance that are extremely valuable in your insurance mix. Thank you. Hey, thanks for watching. I really hope you liked this video. If you did, click the link in the description box below for more information. Like this video, share your comments, questions, and feedback in the comments section, and don't forget to hit subscribe to our YouTube channel.